Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some more information that I'm grabbing from Twitter. I'm sure it's pretty reliable information. It doesn't really impact my view on any of the sectors. I usually just do, again, the three pillars: ratio analysis, which tells value; technical analysis, which also confirms, at least on a big picture view, your timing. Short term's obviously the hardest to do. And then market conditions of when ratios are about to change. That's your market conditions. So that's the three pillars. That's what I use to invest. Now, this is more just information and articles and stuff like that. I would use it more for just maybe validation of what's going on or more information. I'm not really a news investor or an information investor per se. What I like to do is I like to see trends. I'm an investor based off of trends, and what I'm looking for are points where things go from a downtrend to an uptrend. So I'm looking for paradigm shifts in the market and where things are low, basically based off of market conditions, and ratios just tell us where the money is and isn't. If that's interesting to you, obviously sign up for the Finding Value website, Platinum membership below. You can see the link for that. And I do a lot of education on that type of stuff, and I also do what I think are good, solid companies for this next coming bull market. But this is more information about the coming bull market that we have in front of us. So here we go. Let's dive in. We've got John Quake's Japan's business media now calling for a government policy enabling emergency restart of for 23 of its operable nuclear reactors that have not yet been restarted since Fukushima. Rapid reactor restarts, sudden unanticipated uranium demand. So I was talking about this, before, that we're going to see more extensions and more restarts of nuclear reactors. This is just one of those things that I think is going to happen during an energy crisis. They are going to restart and use absolutely everything. When they is just humankind. Humans everywhere. Now, looking at Dow Gold equals 1, this is also one of the things I was talking about. We talked about it in the question and answer session a couple weeks back. What this chart is, it's the United States inflation rate. Either we've peaked or we're absolutely screwed. But we are consolidating into a tightening up of the United States inflation rate. And I think that we've already broken to the upside here, and we're just calculating this new stuff differently than what we've calculated before. So I think this is contracting to a point, and I think we've actually broken out already. It's going to be very interesting to see what this inflation rate's going to do, and if we get out of control inflation. This will lead to money rotation into real assets, because that is the thing of value. That is what everybody wants. They don't want I'll call it, they don't want a Bitcoin. They want what Bitcoin can buy. And what is going to be purchased with it, the final payment, the final thing that people want, is going to become, I think, more scarce in relationship to dollars in the system. So prices will go up of everything. And for some reason, I can talk about inflation rates, but when you talk about home prices, and really all they're doing is accounting for the inflation in the system, everybody gets kind of hurt over that, because it's a sore topic for some people, as they don't understand that inflation is going to impact everything. We've got down here, this is John Hinster. I follow him on Twitter. This is URNM. This is URNM, the chart right here, and he's got a potential, moving up. We can see these. I think these are moving averages that he has turning higher here. We'll see if this rotates and turns on up. Again, the short term is the hardest to predict. It will make, since short-term predictions, and I just want to come in here real quick. Short-term predictions are only about 60% right. So what a lot of people do is you can use technical analysis. You will be wrong at some point in the short term. It's just a matter of statistics and probabilities. And what people will do is they'll try to say, "Oh, you made a wrong call," and it's like, well, yes, 40% of the time I will. It's like the statistics. So when people look at the short term, and this is what we're doing here, we're looking at the short term, that 60% of the time, if you're a good, solid technical trader, you get 60% of the wins. Sometimes you can increase the odds a little bit, maybe 70%. That also means, 3 out of 10 times you're wrong, or 4 out of 10 times you're wrong on the short term. Now, I don't play the short term because of the statistics. I don't play that. I play the long term. It's a much higher probability bet, and the returns are far bigger. But I just want to step in and let you guys know that. Coming on down, we've got another one from Hinster. This is silver. It would be cost before the medical event. We are currently on second floor, moving on to third, and so on. So this is the first floor, basement, second, third, fourth, and fifth. What he's using as these levels are other support levels. So we've had support through here, or resistance levels coming on up and support. So that's the third floor, the fourth floor, and then the fifth. These are resistance levels as we go up, and we're between the second and third floor for resistance support levels. And that's what a possibility could be. We've got here, this is the U.S. total crude oil production in 1,000 barrels per day from Doomberg. We're not coming back to those highs, it looks like. It looks like we're struggling. We've made some headway, definitely from the bottom here, but we haven't made as much as what maybe some people have thought. And here is U.S. liquefied natural gas exports. This guy is moving on up. And again, I think that natural gas over time will converge to the international price, which is much higher than our U.S. natural gas prices are at. So I think that U.S. natural gas is a huge opportunity. I talked about it heavily on the website, the Finding Value website, for the Platinum members, and we are positioning in companies that are natural gas related on the website, and I've got those posted for everyone to see that are Platinum members. Looking at this is shipbuilding. I threw some shipbuilding here. Million GT deliveries. This is the last shipbuilding peak was in 1975 when output reached 36 million GT. I think that's gross tons, maybe, perhaps. So they're talking about gross tons in delivery. Then we had this major peak, a new record of 100.9 million tons of GT back in 2011, it looks like, 2012, 2011, 2012. This peak over here. And you could see the periods here of period 1, 2, 3, 4, 5, and it says rapid growth of sea trade driven forward by a series of cycles. Overcapacity and trade slump triggered by the 1930s depression. Shortages of yard capacity at start and post-war trade boom. Post-war trade boom. And what's going on right now? We have a war, and we're probably going to have a post-war trade boom. Yard overcapacity and trade slump. We had trade growth and yard expansion through this thing, and we've been in a very long down cycle. So we're in that down cycle after here, and I think this is similar to like the 1980s or so. Here is another one. This is the other major dry bulks, container, oil, gas, and chemicals. And what this is ton miles in billions. And you can see that we are moving more and more items over time. We've got a very good growth in dry bulk, major dry bulks. And it looks like that's a big one. Container looks pretty big. We've got decent one in oil. Doesn't look like it's as massive. And I'm just looking at the size of this candlestick versus the last candlestick. The biggest ones that I can tell from this is gas, because you can see gas is very small and it's grown quite large. Dry bulk, major dry bulks, looks like it's grown quite a bit as well. And then we've got, I'll finish this off of the shipping. This is the development and active yard capacity in million. I think that's gross tons. And it's just dropping off a cliff. And the order books are super small for 2021, 2022 especially. These are deliveries, and the deliveries are very low in relationship to history. So I think that we are shipping lots of things, and our order books are quite low because we're in a lull of shipbuilding. We're in a big, we'll call it depression, basically. I thought this was pretty good. This guy writes, start early, invest regularly, think long term, have patience, ignore volatility, ignore noise, stay the course, create wealth. That's actually pretty good. I do like that. This one was posted by Scott. I just grabbed the posting here. This is Japan. We've got the Japan nuclear reactors kind of back, I would say, early 2000s and whatnot. And then you can see Japan, and if this restart comes, we could come quite a bit upward in the nuclear power generation for Japan. So most of these charts, like United States is kind of peaking out. China is going vertical. France was peaking out, but that'll, I think, will head higher. South Korea, I think they'll all head higher. And Japan, definitely, if they restart all those, is going to go back, I think, to maybe closer to 300 terawatt hours. And here's one that I thought was just a cool quote. It's every dead body on Mount Everest was once a highly motivated person. So maybe calm down. I thought that was kind of cool. We've got Wall Street Silver here. It says the next collapse is going to be worse than the events of 2008. Just my opinion. What do you think? This is margin debt in billions. And I've talked about margin debt and how this is going to have to deleverage itself at some point, and that we could see an event where the overall markets sell off. And I didn't have a for sure, like I didn't know how that was going to impact our commodity investments. Could it all sell off at the same time? Yeah, it could. Maybe not. And I don't have that answer, but I'm just showing you that there's a lot of margin debt out in the system. Oh, and this is Scott's, this goes with this. He says, my rough calculation tells me they'll add 15 to 20 million pounds to annual demand if they ramp up to pre-Fukushima levels. That's a big chunk of the world's demand, 200 million pounds. Japan was one of the largest consumers of uranium. Refer below, huge upside. And that's what he means by this move upside. All Things Ventured, he has some stuff on the shipbuilders. Those are the three charts that I showed earlier. He says ship deliveries in 2022 and 2023 will be similar in the gross tons to those seen in early 2000s and less than the peak of 1975. 75 was over here, down low. Ships built leading up to the 2011 peak will need to be replaced. Ships built to the leading up to that will need to be replaced. Global ton miles have grown around 500% since 1975. Think about it. What he's saying is that there's probably going to be a squeeze in shipping. And that squeeze is going to be realized here, I think, pretty soon, within a couple of years. We have to remember the markets are forward looking. You have to position before the markets because we're going to start, I think, going up at some point. And the technicals look quite solid in it. And what he's saying is the global ton miles are up 500%, but yet we are building less than the peak of 1975, but we're shipping around 500% more than that. And a lot of these ships are going to have to be replaced. So I don't know where this is going to lead to I think a big short squeeze of containers, well, not container, dry bulk ships is what I really like. All Things Venture says, I'm going to pound the table a bit more about and show that shipbuilding capacity is insufficient to replace scrapping, let alone accommodate trade volume growth. And if we're going into what I consider to be the largest commodity boom that we've ever seen, don't you think that we need the ship volume to ship this stuff around the world? I think so, and I think we're going to get in a squeeze at some point. But this time we will look at the global aggregate merchant fleet, and that's what we were looking at. It says, dear uranium investors and bulls, when in doubt, just look at this image. We are all going to make it. It says the widening supply-demand gap forecast. This is the primary production, secondary, and then the large supply gap that comes. And it looks like it kind of goes into this gap here in 2023. This is the restart of idled capacity as well as we come up for production. But the gap of supply, and with all of these new reactors coming online, not new reactors and restarts, I think we could push this even forward a little bit. But again, I own this stuff. I'm sitting in it, and I'm not worrying about it. I'm just going to ride it. This is Dan Pickering. He had a nice little quote here. It says, "Yet another wake-up call for underweight energy non-believers. Buffett and Berkshire bought 40 billion of energy stocks in Q1. I'm sure it was just a trade," as he's joking. So Buffett and the other guy, I can't remember his name, they're loading up on energy stocks, guys, just like we are. They see the writing on the wall. They see the value there. And I think that's pretty cool that they're loading up basically just after we're loading up. This is the NASDAQ oil relation. Last time this kind of event happened, the NASDAQ underperformed during 9 years. So this happened last time. This was 2000 as we came on down. And I've always thought that we are in the 2001 timeframe right now, and that's where I think we're probably at. So you get these you get this pullback that comes up. That's 2000. 2001, we pull all the way back. This is 2001, in my opinion, that we're at. And then I think we have another, I don't know, maybe 7 years left in this is probably a good bet. If last year's bull market lasted 9 years and we're about 2 years into it, I think that's probably about right. Looking at the dollar, I threw this in there. The dollar has launched higher. And usually when you break out of these areas and they launch like this, it's basically a spot where we could reverse lower. This is the DXY. This is a relative strength indicator, basically. But we're all the way up here. I think this will turn around and head lower at some point. Crypto Rover, I just wanted to show you this. He has a nice post here that ties into the dollar. The DXY is finally retesting its 5-year downtrend today. If we get the rejection like the last 2 times, we could reignite the bull run for 2020. He's referring to Bitcoin. I don't really care about Bitcoin, but you can see this chart of the DXY and how it's coming up and hitting its high here, the resistance line, where we could eventually start heading lower. Grady, he's a guy that I also follow on Twitter, kind of some cool things. He says, "I called the mother of all commodities false breakouts." This is the false breakout down below its megaphone pattern. He says, "Back in late April and the commodities complex bear market low. My CRB chart here is marching on as expected and is now up against its first resistance." That's that resistance up in here at 2022, right where the red arrow is beginning. It's the glorious bull market has now started. And we're just coming back up into this. And to read this, this is my gigantic 40-year expanding symmetrical triangle megaphone. I've also plotted some of these megaphones on shorter time scales in some of other commodities, the companies themselves. This is the so-called false breakout as I see it, i.e. it will reverse back above the lower blue line and then keep going up. And we are just at the blue line if you were to see this on a real-time chart. This has a long way to go up to hit that upper level, that upper line. So we have a long way to go on a big picture view. We could have a gigantic bull market, and this bull market is probably going to be bigger than anything we've ever seen. Here's Elon Musk. I want to show Elon Musk. It says, since I've been asked a lot, buy stock in several companies that make products and services that you believe in. Only sell if you think their products and services are trending worse. Don't panic when the market does. This will serve you well in the long term. Another long-term investor. That's pretty cool. I agree with it. And in commodities, we will have tops. But overall, you want to be a long-term holder in these things to realize the entire value. So that's what I have for today. Oh, we got one last one up here. I missed this one. It says, it is vital to figure out your personality and with that, what kind of investor trader you are, and to sync this with time frame, choice of markets, strategy, risk thinking, etc. I see so many examples where the groundwork has not been laid. It is really worth doing that. And you have to figure that out. And for my own personal investment style and what I've morphed into, the market's morphed me into this. I am not a short-term trader. And I know I do short-term things because people want me to do that. They want me to put up technical analysis patterns. They want me to do the short-term thing. Anyone who's been on this channel knows that I'm not a short-term trader. I do not short. So there are times where the short-term, remember, this is not the most reliable thing. Short-term trading is not as reliable as you think. So I am going to blow 40% of those calls. Or not, I should say, I'm not going to blow the call. I will be wrong 40% of the time, even though the setup was technically right. That is your statistic on the short term. That's why I don't trade short term. I take the big long-term approach. I get in when the ratios are cheap and I ride this thing higher. Short-term volatility, you try your best to time it and get your purchases in there as low as you possibly can. But guess what? No one's going to be perfect. No one's going to get this right. No one. So what you got to do is you take a bigger long-term view. Long-term views are much more, in terms of a statistic probability, a far higher bet. As long as you know that the market conditions are changing and that the fundamentals and structural fundamentals underneath the markets are strong for those sectors. If that's the case, I buy and I just hold. I hold through the whole thing. Why do I do that? It's less stressful. It's a higher probability, bigger gains. That's it. The market turned me into that. I used to do short-term trading. Guess what? Didn't work. Didn't work. Oh, well, you're not a good enough trader. Well, there's not many people who do very well in the short term. And even if I was good, it's too, you almost have to like basically live it, eat it, and breathe it. And I do live, eat it, and breathe it. It's just, I don't think it's worthwhile. And I think it's too difficult to run a website or to run a channel like this to do that. I also think that it's more like gambling, and what you're going to do is you're going to be more of a gambling type. I don't like gambling. I just want to buy my stuff, let it sit for a long time, and then maybe sell it in the future when the trend is over. And the big money's usually made there. And for the most part, on the big long-term scale, everything has been basically transpiring the way that we thought it would. We're rolling over in market tops. For NASDAQ, stock market, bond market, the money's rotating over to commodities. I think Grady's basically the same person as me. If you look at this stuff, I look at things from a big picture view. You try to find where you can, the closest to the bottom that you can, and then you cost average in. And then you just sit in it. You just sit in it and do nothing. Are you going to time every single buy the most perfect time? Nope. You're not going to. You're going to have to just try your best. Do not beat yourself up over all this stuff, guys. Do not beat yourself up. Get the big picture right. If you get the big picture right, you're going to set yourself up for a life of very good returns. And even if you buying a house at the right time, refinancing at the right time, all of this matters for, a life that could be a little bit better than what it was before if you didn't know any of this stuff. Being an educated investor and always improving yourself, becoming better, taking ownership of when things are wrong. And you know what? I'm going to make a couple of wrong calls, but guess what? That's part of the short-term thing. And everybody wants me to do short-term stuff. A lot of people do. I can tell by the number of views that I get. That's my feedback. But again, I don't short-term trade. I stick in this stuff. I accumulate the assets that are cheap. Some of these are going to take off. Why do I diversify my holdings the way I do? I diversify my holdings out because they're gonna hit at different times. I'm not the one who's going to try to time all this. That's not what I'm going to do. I'm going to try my best. But what I'm going to do is I'm going to sit in the cheap assets, ride them all higher. Ride. I own precious metals. I own some mining companies in a 401k, in a diversified thing. I own royalty companies. So I have exposure there. I have exposure to base metals. I have exposure to royalty companies in base metals. I have exposure to even, I have one renewable, I know, I get it. One renewable royalty that makes money off of electricity generated by renewables. I have shipping companies. I have agricultural companies. I'm spread out in the commodity sector all over the place. I don't know what will do the best. We have previous data. We have things that we know, like oil and natural gas, uranium. Those seem to be the highest leveraged. Will they be the highest leverage this time? I think so, but nobody knows for certain. So what do I do? What's exhibited the highest leverage in the past? I spread out amongst all of those with the best value, and then these will hit at different times. So your portfolio will hit up, and others will pull back as another one's going up. I see that as a way to balance out the volatility while also perhaps maximizing your returns and at least capturing those gains that those sectors have. So if that sounds interesting to you, sign up to the Finding Value website. We talk a lot about what are the best sectors to invest in. I have a lot of ideas out there, a lot of, I think, very solid picks. And I'm going after probability of success along with possibility. I'm doing a little bit of both. I'm overweighting higher probable bets with very good returns. I am underweighting the possible returns that could go ballistic just based off of what is possible. But the probability, you want things that are going to for surely put money in your pockets, ones that are undervalued for what cash flow they're bringing in. And that's more of the oil and natural gas sector at this time. And we'll see, shipping is looking good too. And if you're wondering what companies, I have got it all on the website put up. So the platinum membership will get you all that. If you're wondering what companies I own, you can see my portfolio too and everything in the portfolio that I own. All right, guys, give me a thumb up for the content, subscribe to the channel, and we'll catch you later next time. This is Finding Value.